All right, everybody, welcome back. I'm Willa with Willa Trades, and if you're here because you're interested in learning how to day trade, or maybe you're going on your journey and you're getting frustrated. Maybe you're at that place where you're thinking about giving up. Trading can be a perilous journey, as they would say. Lots of complications, difficulties, twists and turns. Every day you're trying to call the market, trying to figure out exactly what the hell is going on, and you're also fighting against your own tendencies. Really, the thing that I say, and I think I said this on my last watch list video, the first thing about trading is you want to learn how to understand the charts, obviously, but you want to learn how to set your levels. The next thing that you want to do is you want to watch how the market moves around those levels. And then the thing after that, and probably a big final thing, is you really want to develop a setup that consistently gives you profitability. Now, along the way, you're always fighting against your own tendencies and your own difficulties and challenges. And this is the part that makes trading really interesting because when you fail, there's really nobody to blame but yourself. It's a human tendency that we want to blame other people or we want to blame something else other than ourselves rather than to take accountability. Listen, I'm human, so there has been no exception here. I definitely went through that place in that state. Fortunately for me, because I have been an entrepreneur for the last 20 years, I know ultimately that, the buck it stops here. It rests with me. And on this journey, I've seen so many people because I've been a member in several groups with people who get frustrated, run into the same kind of consistent behavior or habit patterns that are causing them to fail or not be successful. And I, again, am no different. I have experienced that. It can be very frustrating. On average, I would say, from what I've looked at, generally it takes people about 2 to 3 years to get really good. Obviously, there are people who beat that curve. Some people who are good in that first year. Some people it takes 5 years. So the big thing that I want to say to those people out there who really love it and really interested in how it works, definitely don't quit. Here's some things that I've learned about on my journey that have helped me improve, and hopefully you can find this helpful to help you improve. One, big thing is don't take trades if you do not feel the confidence in the trade. Okay, if you don't feel the confidence in the trade, doesn't matter if it's going to pay. You're going to mismanage it. You're going to mismanage it. It's just a excuse me, just a human psychology thing. You're going to mismanage the trade because energetically, mentally, you are off. You are not dialed in. Okay, you're going to want to get out of it early, which is how people get small wins and big losses. Because once you get into a trade, this actually happened to me about 2 weeks ago. I entered a trade. I actually entered the trade at the perfect number. However, I was on a mission where I wanted to make money that day, and I caught myself in the process, and I got out of it with just a tiny profit. But if I would have stayed in the trade actually paid great. Number two, don't focus on the money. I mean, obviously, you're trading because you're interested in earning extra money. However, this is big with me. I like to get the big wins and I like to make money. If you're focusing on the money, you're not focusing on the process. And it's more important that we learn how to focus on the process, and the money will come as a result of that. That is a very difficult thing to actually take internally, right? Because we're very results focused, especially, me being a man, I'm very results focused. I really want to see the reward. I really want to see the light at the end of the tunnel. But the reality of it is, while you're learning, you have to be really comfortable and confident that you are taking the right steps. You are looking at the charts the right way. You are managing trades the right way, whether you win or lose. And you have to be able to congratulate yourself for that. One thing happened to me on a trade that I lost recently this past week actually. I didn't really like the charts. It's election week, and I thought I was seeing a potential place for me to enter. Actually, it was Friday, and the chart is kind of behind us. I thought I was seeing an area where I thought we might reject. a little bit early because we were coming up to the 6,000 point on SPX, and it's actually right behind you. We were coming up here. I took a reject, but I got into the reject just um, a little bit late. And the thing that I thought was my confirmation was it looked like we were holding below. Looked like we were holding below the last close on QQQ. Now, my original trading plan of the day, that wasn't actually in there, but sometimes, the chart changes throughout the day. And my ultimate plan was really to watch when we got up. And if you go back and watch the watch list, when we got up to the pre-market high, funny enough, we get up to the pre-market high and there's a rejection. And this is actually more of the one I was looking for. Now, I was going to take that on SPX. We're looking at QQQ, but I was going to use QQQ to make the trade. We get up here into no man's land in SPX, and I'm just sitting watching it. And some part of me feels like, hey, I feel like we're going to reject. But after we push through the 6,000 level, I'm kind of, less confident in it. Less confident, thinking that, hey, we might continue to push higher. I just felt like we had to find the top on Friday. I just didn't know where it was going to be. And that's because we were playing around at all-time highs. And that's a very difficult space to trade. Realistically, I should have got up and walked away from the chart. But I did the second best thing, which was take a very light trade just so that if it actually hit, if it actually worked, I would feel like, hey, at least I got a piece of it, right? I took a very light trade, one contract. I took a one contract trade, and lost a grand total of $25. Once I started figuring out that the trade wasn't going to hold true and that they were going to push it back up, it was right around here. And I knew that once I saw us pushing and us bouncing this 200 SMA, I felt like, hey, they're going to push this thing up. So I got out of the trade. I stayed pat. I really could have looked at entering again up here, but you look at the fake outs. So the wise thing for me to do that day was to not trade anymore. But it's an energetic thing because you're sitting there watching and you're trying to figure it all out as you go. And you can't be 100% confident. You've got to learn how to take it. And this is actually another one. You've got to learn how to take a trade. When I say that if you're not confident, you're never going to be 100% confident, or rarely will you be super duper confident in taking a trade and that trade work out. It's more like you're going to be, 60, 75% confident, right? And you've got to be comfortable with taking a risk at 60 to 75 confidence, 60 to 75% confidence, which is why frequently you don't want to put all your money into all your eggs into that one basket. You want to be aware of how much as a percentage of your account you're investing in any one trade and how much you're willing to lose. Here's another one. Another one I had to learn. You really want to be confident that the risk is worth the reward. Okay? Making sure that the risk is worth the reward. Now, I had to let that trade play out with the stop loss, even though I kind of felt in a short order that I don't think it's going to work because I could have been wrong about that. And I made the decision to put the risk up and pursue the reward. And so I have to let that play out. Because if you become a great trader and you are consistently picking winning trades, your losses should be small, but over time, your wins should be big. So the reward has to be 2 to 3 times what you're willing to lose. Okay, that's a big one. That's a big one. So if you can take a trade at a level that you feel like, hey, I'm going to see some kind of reactivity here, and you feel like you have dialed up what kind of reactivity you expect based on observing previous instances of that, what we call a setup, working out. If you can observe that, the next thing you need to know is, what am I willing to invest? What am I willing to lose? And what is the reward? Okay? What is the reward? Is the reward going to be big enough? So say, for instance, if you were looking at this particular chart and you were willing to take this trade, the biggest problem I had with taking this trade, if you just looked at the SPX chart, is you didn't know what your actual risk was. You could have devised one and said, hey, you know what? I'm going to make it if we cross, 60-15. I'm going to make my risk. If we cross 60.15 and we close 5 minutes above it, then I'm going to go ahead and just take that loss. That would have been about a 3 to 4 point swing, right? So if I'm doing 3 to 4 points that way, then I need to make at least, let's just say, for instance, 9 to 12 points going the other way. And that is really how you start to calculate your risk. I'm willing to risk for 3 points going up to give me, a 3 times to 4 times trade. That's a risk to reward worth taking. But again, my issue here was not really being comfortable with where it was. Now, if I were to use this QQQ chart, we're talking about my loss that I had on Friday. If I would have taken on a QQQ chart, I could have said, hey, if we break above and hold above this high right here, then I'm going to get out of it, right? That could have actually been what I used as my measurement. And if you look at the SPY chart, you could have said, hey, I'm going to wait till we get to 600, you know. Again, all of it was like shooting in the dark because you didn't really have levels to work with. You were, using just kind of a trader's inference in the market, right? And so at the end of the day, once you have your setup and you figured out how to work your setup, you've got to be consistent with the execution of that setup, which is the best trades that I take, quite frankly, are trades that I see happening before they happen. If we get there and I'm figuring it out, I got to pull up my contract. I got to make sure I got the right contract up, especially me because I trade out of the money. And that's one of the reasons why I actually love trading out of the money. It forces me to be extremely disciplined. I've got to look and see, hey, when we hit this here, I'm automatically going to go ahead and take the trade. Or I'm going to have my contracts up, and when they show me some instance, like if you zoom in here on this QQQ chart, if they show me some instance of weakness, I'm going to go ahead and take it. Now, if you look at this, their first move was a fake out, which is something that I would have expected. But their second move was the move that actually gave you a few points, right? It went from 51489 down to 514, let's just say 10 or 12. Okay, so you could make that move, or you can wait. If you got another impetus that says, "Hey, I think we're going to test it again," maybe you take that third or fourth test. And different people have different philosophies on that. For me, it all depends on how the market is moving that day. But again, to come back to what I'm saying, is if you have a setup and you know how that setup operates and how it looks and the behavior of the setup and the difference between the day that the market is going to give you that setup, this is very big. The day that the market is showing you, I'm operating kind of in this space where I'm looking for a reject. Okay, I'm looking for a reject. I knew when we entered the market on this day, with it being Friday because of the last week, I knew that the market would seek out a reject area. The biggest piece was being able to call it, and my most obvious area was looking at the QQQ chart, just based on how far the top of the market was, and the fact that it was coming close to 515, which is a psych level. That's what they call it in trading, a psychological level. So when you get the whole numbers or half numbers, they call it a psych level. So I knew that the psych level could pose the biggest opportunity for a reject. But what did they do? They got there and they faked you out, right? So you kind of have to be a little bit aware of how the market operates, whether or not they're going to go for liquidity before they make the move. And that requires you to study. That requires you to go online and watch tons of videos, read books, maybe join a membership group, maybe join someone's mastermind. You've got to be willing to put in the effort for the education to actually learn, what's happening. And you got to put in the screen time, because I'm telling you, I've never been a part of, one of the reasons why I was very hesitant to trade this week and I didn't make a lot of videos, I've never been a part of trading during a presidential election. Simultaneously with the Fed speaking 2 days later, I have no idea what to expect. I have no idea how the market is going to operate. I do in the general sense from the year because I've watched the economy move during an election year. But on a day-to-day intraday trading level basis, I have no idea, right? And there was conversation that said, hey, they've already priced in the Trump win, but when Trump won, the market went up dramatically. So if they priced it in, there were still a lot of people who were on the sideline that were waiting to come in and take advantage. So you got to learn the charts, learn how the charts operate. You got to learn how to set your levels. Okay. Then you got to watch how the charts operate around your levels and use that to develop your system or your setup, as you'll hear in a lot of other videos. And then once you have your setup, you want to make sure you stick to taking your setup. You want to know the important part about a setup is to know when you feel like it's valid and when it's invalid. You have to know both. You have to know when it's valid and when it's invalid. And that was something that I had to go through a lot earlier this year, particularly during the summer. Summer was a good learning lesson period for me because they were giving a lot of fake setups, and particularly in the month of June and May, a lot of fake setups. And I was going into the fake setups, really confident because they kind of given some, and they've given a lot in April. But then I watched very carefully. The market was very tight. And when the market is very tight, there's a lot of liquidity grabbing. And so I had to learn that, right? I finally got to build the system, started learning the edge last year, which was about a year and I don't know, 9 or 10 months in, finally started coming up with my own edge or my own system, as they call it, or setup. And then, you go through a period where the market starts doing something completely different and it's related to outside influences. How does it react with war? How does it react with economic news? How does it react with presidency? How does it react, when a hurricane hits? These are all things that you kind of have to watch and learn and grow from. And then throughout all of that, if you're focused on the process, and not focused on the results, results will come. Focusing on the process, focusing on making sure you've come up with your set of guidelines, your set of rules that guide you in your trading day. Then to that point you execute better. You have a feeling what the market's going to do. You know what days to stay away from. And I heard a big trader named Umar Asraf say that there's probably only about 6 great trading days every month, 6 to 7 great trading days every month, right? And I can verify that. There are about 6 days where the market just gives. It just gives. But then there's 13 to 14 or 13 to 15 other days where it could be anything, and you kind of have to know how those work, whether or not you can see your setups happening, whether or not the market is actually moving, whether or not it's a tight market, whether or not you should be trading early day, and whether or not you should be trading late day. Also, here's a big one. I sit at the chart still to this point just about all day because I still consider myself learning. And a lot of the other developed traders, they come in, they trade for 2 hours, and then they go about their day. But hey, they've got their stuff already established. They've made hundreds of thousands or millions of dollars. And, I'm still working my way up. Although I'm profitable consistently, I'm still working at hitting some of those big numbers. And some of those guys, they'll come in and they'll trade till about 11:30. The funny thing about it is I actually love the market after 12:30. Again, one of the things that happens is because I trade zero DTE, I trade out of the money, the market, the movements matter more. And I really enjoy that part of the process. And I've kind of developed kind of an eye for how the market moves, after the lunch hour. And so when it does certain things that I know is a fake out or I know it's not right, it's easier for me. In fact, this trade that I took earlier in the day, it was like a 12:15 trade, which is a little bit before. Usually I don't like to trade between 11:30 and 1 o'clock. Okay. When you get to 1 o'clock, usually you start seeing some kind of movement and you can take advantage of it. So I'm more comfortable trading during those times. So if I actually leave the chart, I'm more likely to leave it, on any given day at 11:30. So understanding that, when do you have time to trade? When do you understand what they're going to give you? Like the market opens a certain kind of way, right? There's certain days it wants to just break out and you know how it opens, and some people take advantage of that. I like the market to settle, right? It's, for me, I don't like taking breakouts because my account's not huge. If I was huge, if I had a huge account and I was taking trades with a huge account and I could, just what I feel would be take some wild trades, maybe I would throw one contract out there to open in the market, or something like that. Or I don't. And the other thing is I typically don't trade unless I've had a big win that day. I don't trade the last 20 minutes of the market. Okay. If I've had a big trade and I got a little profit to play with, I might take a couple, two small contracts, what we call lotto picks for the algorithm. But typically the first 15 to 30 minutes I don't trade, in the last 15 minutes I don't trade. And then again, between like 11:45 and 12:45, I don't really like to trade that chart. So you kind of got to start to isolate those things, and then you have to consistently make the decision of when to trade and when not to trade. And this is the biggest thing that I see people get in trouble with in a lot of the groups that I'm a member on, is that people take trade, and this has happened to me too. So I'm not above the fray. People take trades where they're taking a risk, and it's like they don't really see their setup. They just want something to happen, or they want money. Even me on Friday, technically, I took a trade and I could you can always rationalize why you took the trade, because I thought, hey, we were rejecting the previous all-time high. That's actually what was my impetus. I thought we were rejecting the previous all-time high on QQQ, and I was waiting for us to break and hold below the previous day's close. And when I saw that, I'm like, okay, boom, this is the 1 minute chart. But if we put it together on the 5 minute chart, you'll see I waited for a 5 minute close, which there was a lot of logic behind that. Let's look at it right here. Boom, here we are. We're rejecting the previous all-time high. We come in, we push down, and this is me. I'm entering in here because toward the end of this candle, or right toward the end of this candle, we hold below. So I'm feeling pretty confident that, or I'm feeling more confident, but not confident enough to put on any real size. So I put in one, after looking at this 5 minute candle, I put in one, probably somewhere in here, and boom. First of all, I'm trading during a time I don't normally trade. I'm looking for something, I'm grasping for air, and nothing happened. I lost money, right? So knowing when to trade and when not to trade. And then, of course, the biggest piece is knowing how to manage your risk. One of the things that was tough for me, and I think it's every trader, is learning how to take a loss. Learning how to take a loss is one of the biggest impediments to most people being able to trade. And in the beginning, it would be so hard when you picked a trade that you thought was a good trade, it goes against you, and you're looking for it to turn around. I have made it a rule for myself that I never look for the trade to turn around anymore. I set my stop loss. I set my stop loss. And even if it's a mental stop loss, and when it fulfills that, I don't care whether or not it's going to turn around anymore. I don't. I don't care, because if I cared whether it was going to turn around, that would make me more predisposed to allowing bad trades to run. I would rather sell out of it, and if the trade goes the way that I thought it was going to go, that's all right. I live to trade another day. I have lost, I have put thousands of dollars on the line, or lost thousands of dollars, tens of thousands of dollars, holding a trade that I was looking for to turn around. Okay. Holding a trade that I was looking for to turn around because I made the trade and I really wanted to succeed that day. I wanted to make money or have success, and boom, I crap out. I crap out at the table. It's like Vegas, man. You got to know when to go home. I mean, this is not gambling. There's a lot more to it. It's understanding the market, understanding the charts, understanding the probability of trades. But you got to know when to take the loss and go home. And a lot of people I see who get frustrated, quit. Their real issue is with their own inability to control themselves. I was already pretty good, but trading has shined a spotlight on the necessity of me to really learn how to control my impulses. Because if you can't control your impulses, you will go bankrupt. Okay? You will go bankrupt. So that's my little trading journey and trading advice for you guys. Hopefully, some of you have found some information that you can cooperate, or if you're looking to get into trading, maybe you know, take it out, jot down a few notes on what I just said, and if you can avoid those things and pay attention to those pitfalls, I'm telling you, you have a beautiful future in front of you. That's all for me now. Please hit like and subscribe. Share the video if you know somebody who